Hi there, welcome to Kneppy Invest. I currently have this mission to do a video on every single company that achieved an operational cash flow positive June quarter. Unfortunately for me, I didn't realize there's going to be over 120 companies that achieve this very important milestone. So to fulfill my mission, I've decided that I'm going to have to, I won't say cheat, but I want to do with a few of the companies that I don't want to do more research on. I'll just lump some of those companies into the one video. And this is the first video where I'm doing that. So in this video, I'll be looking at 4 different companies. And there is reasons behind it. I want to do further research in these 4 companies. I'll talk about that when I get to those particular companies. So let's look at the first company, which is N1 Holdings. N1 Holdings is a microcap on the ASX. They are a non-bank lender. They also provide financial advice to small and medium-sized enterprise. With a markup of $8 million, you might think there is opportunity here, particularly because the company is operational cash flow positive, $600,000 for the financial year 21. And they are bringing in a bit of receipts as well, $4.5 million in financial year 21. So you won't say this is expensive company. But there is one reason I'm not interested in N1 Holdings, and that's when we look at the cash receipts history for this company. So let's have a look at that right now. On the top left here, we have the cash receipts for N1 Holdings going back to the March quarter 2016. We don't see any growth at all in their receipts. In fact, during the last 5 or 6 years, receipts have been between about 800,000 and 1.4 million. Management will have to prove to me they can grow their cash receipts, their revenue through time over the next 4 or 5 quarters before I become interested in this company. And even the market is not interested in N1 Holdings. And you can have a look at the chart on the bottom left here. Share price has been drifting lower over the past 5 or 6 years from about the mid 20 cents to a current share price of just under 10 cents. Not a lot of volume at all. In fact, because this is the weekly chart, there are large periods of time here where there is no trading at all in this company. So at this point in time, I'm not interested in N1 Holdings, and it seems like the market is not interested either. The next company I want to discuss is Wellard. Now, there are a few reasons I'm not interested in Wellard, but this company has seen significant problems over the past 4 or 5 years since they listed on the ASX. So Wellard is sort of a live animal exporter. So they're the company, one of the companies that will put cows, sheep, whatever, on the ships and then send them overseas. And when you look at their June quarter results, and when you compare the fact that the receipts are about 14.7 million, and now operational cash flow positive for the June quarter by 5.7 million, and compare that to the market cap or the valuation of this company, you might think there could be some good value here. And if you do argue that, I won't push back because you'd probably succeed if you go down that route. Market cap of 39 million, but they do have a little bit of debt, $14 million of debt. And because they have cash about $7 million, the enterprise value is more approaching 50 million than 39 million. And cash receipts for the financial year 21 was 43.5 million. Now, they were operational cash flow positive, nearly $10 million for the financial year. And if you take all that in isolation, there is some really attractive value in this company. My main concern is just the business this company does, the live exporting of animals. There is some, over the past 3 or 4 years, maybe even longer, there has been a fair bit of negativity around that sort of business. And I don't think that's going to ease up anytime in the next decade. And so that's the main reason I wouldn't be interested in Wellard. However, there is potential value when it comes to this company. But this company has been under stress over the past 5 years. So let's have a look at not the receipts history, I think it's the revenue history, and then the chart, because they haven't been issuing Appendix 4Cs for very long. Wellard listed on the ASX in late 2015. The share price when they listed was around $1.40. And when we look at the financial performance of Wellard in the past 5 or 6 years, the only word that comes to mind is horrendous. In fact, revenues have dropped on a half-yearly basis from $300 million to $18 million in the last half year. The one slight good thing when you look at the financial performance of Wellard is they have become operational cash flow negative to operational cash flow positive. So that is one slight tick. But it is and should be concerning that the revenues have fallen precipitously in the last 5 years. And that is being played out in the share price performance as well. The share price has dropped from $1.40 to a low of 2 cents by the middle of 2019. But in saying all that, if we do look at the chart over the past 2 years, the share price has started to go sideways or consolidate. And we do see a bit of resistance at 8 cents. Every single time the share price gets to about 8 cents, it falls away. And right now, the share price is at 7.3 cents. And in fact, the market did react quite positively to the most recent June quarter Appendix 4C. Share price rose from about 6 cents to 7.5 cents. If the share price can get above 8 cents, get through that resistance level, this could be a short-term momentum and trend play. I would not buy into this company for the long term just because I don't think the future is looking bright for this company. And even if you look at the past 5 years, the future has not been bright at all, and that could continue in the future. So if I was thinking about buying into Wellard, it would only be a short-term play, not a long-term buy and hold sort of investment. From a low quality company, that is Wellard, to a much higher or better quality company, that is West African Resources. This is a gold producer that recently went into production, I'd say maybe a year or year and a half ago. And when you look at their June quarter results, you can see why the value of this company is right now at $1 billion. So the market understands that as soon as this company went into production, they were going to produce prodigious amounts of cash in their operations. And they're definitely doing that when you look at their results. Receipts at customers in the quarter, $158 million. And in the one quarter, they produced $61.8 million of cash flow in their operations. And when a company is able to do or produce that amount of cash, there's a lot of things management can do with that cash flow. And what West African Resources Management have decided to do is repay their debt. So in fact, in the most recent quarter, they repaid $67 million of debt and currently only have $161 million of debt on their books. I do like the priorities that management have shown that repaying debt is one of the most important things they can do with their cash flow. Because West African Resources recently went into production, we only have 2 halves of financial history in this company. So you can't take anything away from that. There are some investors who want 5 years of history before they even think about taking a position in a company. However, the market has liked the story in regards to West African Resources over the past 5 years. In fact, the share price has risen from 6 cents to a current share price of $1.03. So the main thing I'd probably take away from West African Resources is if I want to do a little bit more research on the company, I want to find out the mine life of their current mine that is in operation and other projects they have in West Africa. So I'm assuming right now most of their projects are in that part of the world. The final company I want to talk about today is probably the most intriguing company I've discussed in this video, and that is Data.Technology. This company provides theft, deterrent, and asset identification technology. There are 2 reasons why I haven't delved a little bit more deeply into this company, even though it is a little bit intriguing to me. And I'll talk about those reasons in the next slide. However, in this slide, I'll talk about the reasons why this is slightly attractive to me right now. The first reason is the market cap or the value of the company, $9 million. Now, a market cap of $9 million in isolation means nothing because the company could have no products it's selling. It could be burning through multitudes of cash. But Data.Technology is operational cash flow positive. And it's not by a small amount. It's actually $1.4 million for the financial year 21. And not only that, they have $2.3 million of cash at the end of the financial year. So the enterprise value of this company is around $6.5 million. And with the enterprise value of $6.5 million, and they are operational cash flow positive by $1.4 million, I think it is wise to delve a little bit more deeply into this company just based off these few facts. Though it may be wise to delve a little bit more deeply into a company that has low valuation or attractive valuations and is operational cash flow positive. I think there is a reason why the value of this company is $9 million and enterprise value is $6.5 million. It all comes back to cash receipts history over the past 7 quarters. In fact, cash receipts are going sideways. So the company hasn't proved to me or to the market that they are growing their business, that they are gaining traction. Then I think I and the market want to see this before we become interested in this company. And you can see the market is not interested in data.technologies just by looking at the weekly chart, which I provided on the bottom left here. The share price has been going sideways over the past 2 or 3 years. And I'd want to see a bit of a breakout in the share price or increasing cash receipts in the company before I even think about taking a position in data.technologies. That is all I have for this June quarterly report video for N1 Holdings, Wellard, West African Resources, and data.technology. If you have any opinions or thoughts about any or all of these companies, I'd love to hear it, and maybe I could learn something. So leave a comment in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.